Hello, everybody. This is Chuck Carnevale, co-founder of FastGraphs, the Fundamentals Analyzer software tool. And I got to tell you, I'm really quite excited about these preview videos we're doing here, where we're kind of introducing the future launch of a really exciting new product that we're developing at FastGraphs called the FastGraphs Value U Academy. And the short version of what that's going to be about, a lot of people have always asked us, how do you analyze a stock? How do you read a financial statement? How do you make better financial decisions and investment decisions on common stocks? Well, we've developed FastGraphs Value U Academy to do just that, to help you make those important decisions. And we've engaged the association of two really renowned academics in their fields, two gentlemen, William Kay and Nathan Mock, that are going to help us demystify some of these important concepts, especially the financial statements. People consider those boring. We're going to try to make those more fun, try to bring them to life, help you understand them better. And so this is a preview of some of that work that we're going to be giving you in the future. And we plan on launching this sometime early in the beginning of 2021. And we're really excited about it, as I mentioned. But, this particular section, we've got a very comprehensive syllabus and curriculum that we're going to be covering. But this particular little preview here is we're going to be talking about financial statement analysis and how we can help you demystify the financial statement. In this particular little preview, we're going to have Bill and Nathan talk about how the financial statements work together, how you can understand the importance of each of the big three. I'll call it, of course, the balance sheet, the income statement, and the cash flow statements, and how those things work together, and how you can understand how to analyze them so that you can ultimately make better financial decisions. So what I'd like to do now is go ahead and turn it over to Nathan and Bill and let them talk to you about how financial statements work together. This will be under topic 5 in our curriculum, where we'll be talking about very comprehensive financial statement analysis, how to review an annual report, the total package, the role of auditors, et cetera, et cetera. It's going to be quite comprehensive. So without further ado, here's Bill and Nathan.
Confusion on the financial statements. People really don't understand what each financial statement shows us and how they work together.
Yeah, that's definitely an area of confusion. Let's take a look in FastGraphs and see what financial statement information they have. I'm taking a look in FastGraphs at the fun graphs. And we got Johnson & Johnson up here. And along the left, we see that we have 3 financial statements: the balance sheet, the cash flow statement, and the income statement. And a really common question investors have is, how do you tell if a firm is healthy? And one of the first places you should start is looking at the financial statements. And so one thing that's really handy about FastGraphs is, instead of just looking at numbers, you can drill down and visualize the data here. So just as an example, if I click into the balance sheet, I can take a look at the total debt that Johnson & Johnson has. This is in millions of dollars. This gives me a long history of the amount of debt that Johnson & Johnson has on their balance sheet. Similarly, I can look into the statement of cash flows. I can see what their operating cash flow looks like over time and get a trend of that and see the amount that they have, about $23 billion in operating cash flow in 2019. And we can look at the income statement, and we can look at things like revenue, their total sales, and we can see that they've got about $82 billion in sales as of 2019. We can see the trend. You can see items like net income, so the profits that they make. And it's really nice to be able to just see this instead of trying to look through financial statements and pull all the data out. It's just here for us visually. And one other item that's in the fun graphs is the market value, which takes the price per share and multiplies by the shares outstanding. So this is the market capitalization, the market value of the firm. And you can see Johnson & Johnson has about a $383 billion market cap. But as people try to figure out what makes a firm healthy, is a firm healthy? Do they have a good balance sheet, a bad balance sheet? A lot of data items here, Bill. How would you go about making sense of all of this, and where would you start?
Great question, Nathan. And yes, each financial statement does show us one particular thing. And if I'm going to share my screen and bring up a slide here, can you see that slide all right, Nathan?
Yes, I see it.
Well, I am going to bring this up. And here are those 3 statements you talked about that are in fun graphs. We always start with an income statement at the beginning of a new fiscal year. All of these accounts are zero. We call them temporary accounts. They roll back to zero when we start a new fiscal period. And they accumulate over the year and show us the profitability of a company in accrual-based accounting. You can see accrual at the top. The ending key financial statement, as we looked at in fund graphs, is the balance sheet. The financial health of the business on one day. And we can look at that at the end of the fiscal year. What do they own, their assets? What do they owe, their liabilities? And the difference, their shareholders' equity. Now, these two are in accrual, but cash is very important and cash is king. And we have to look at that third statement, the cash flow statement, to understand cash. So to see how these three key financial statements tie together, I've created this slide, Nathan. And if you have any questions as I go through it, please ask and we can discuss it. We start with sources of capital or funds. Any business has to raise capital. It takes capital to run a big business. They can do it through equity. They can do an IPO and sell stock. And Johnson & Johnson has taken on some long-term debt, and they have done an IPO and collected capital, raised capital through equity. Now, they are going to have some great products and services, and they have to do R&D to create those, and they are going to sell that to a customer. That's the key to success. Have something that you can sell to the customer. To do this, they are going to have to acquire assets. So they take the capital, the sources of funds, and use it to buy assets. They capitalize the assets. They got some current assets, liquid assets, hard fixed assets they can depreciate, intangible assets like software and other things, intellectual property, copyrights, even goodwill. And they're going to hire people and have costs and expenses to run the business. At the end of a period, they will stop. Let's say the end of a month. They'll look at what are the sales for the month. And in accrual, we have to match cost and expenses. And the difference is profit. It's not cash flow, it's profit. The board of directors at the end of a period, it could be the end of the fiscal year, get together and say, we've made some profit. Now, this could be at the end of a quarter. What are we going to do with it? Are we going to put it back in the business in retained earnings, or are we going to pay part of it out to shareholders as dividends? Usually startup new companies don't do that, but Johnson & Johnson being an old company, they do pay part of their profits out as dividends, and we call that the payout ratio. So this is what we look at in accrual. In 1988, the accounting board said companies have to show us their cash flow statement. So what do we do there? We take the accrual profit and we take the accrual out of it and come back to a very important number called cash flow from operations. That's one of the things that Nathan, you brought up in fund graphs. That's real cash. We can use and spend that cash. So Johnson & Johnson will take part of that cash and use it for investing in capital expenditure, buy new equipment. They can even buy a business with it. Or they can use part of that cash to pay dividends, as we talked about, or basically paying back debt if they need to. Or they can bring in money into financing from selling stock or borrowing more money. So we look at what happens to actual cash from operations. What did we do with it? Investing and financing. And finally, what cash do we have left at the end of the period? And that goes to the top of the balance sheet. A bit of confusion on the financial statements. People really don't understand what each financial statement shows us and how they work together.
Yeah, thanks, Bill. That's a great overview of how the financial statements fit together and the different information that's in each. But I really like this sailboat analogy you have. So would you tell us more about what are these arrows? What do these arrows mean? What's the sailboat story here?
Yes, Nathan, when I think of a business, I think about a sailboat out on the water. And a sailboat has to have the water to float in. As we all know, cash is king. Cash keeps you alive. So we think about the water as the cash flow statement. Also, a business has to have a good, sturdy foundation. We think about the hull of the ship, and if it's going to remain in the water, it can't have any holes. It can't take on water and sink. So we want a healthy, strong balance sheet, good assets, not too many liabilities, and a good debt to equity ratio. So we think of the whole as the balance sheet. And last, what moves the sailboat through the water? What moves the business forward? We're always thinking about the top line of the income statement and growing sales, growing revenue. So a great business is like a sailboat. And management job is to grow sales, keep costs and expenses under control, and anytime they take that cash and invest it in an asset, they want a return on assets.
That's great. Thanks for that description of how you keep the ship afloat and how you keep it moving, and how the financial statements give us the information to let us know whether or not that's going on for a firm that we're looking at. Thanks, Bill.
My pleasure, Nathan.
Thanks, Bill and Nathan. That was excellent. Really good insights into how financial statements work together and also how businesses build their financial reports. But, what I really liked about it was the sailboat analogy. That was really terrific because it really gave you some insights onto, what keeps a business afloat. So thanks for that. As far as those of you who have watched the video, I want you to know a couple of very important things. Number one, we plan to do just untold number of additional videos where we're going to get really comprehensive about not just reading financial statements and how they all work together, but we're going to be providing definitions of important metrics, things like EBITDA, diluted earnings, GAAP earnings, but we're going to try to do it in a fun way so that it's not only insightful, but also something that isn't going to be real boring for you. But here's the best part. We're going to do this free. It's going to be free and available on the FastGraph website. It's also going to be free and available here on our YouTube channel to all comers, whether you're subscribers to FastGraphs or not. Now, we are going to offer an adjunct subscription service to the FastGraph Value U Academy, which will not only have the content, be able to share in this content, but each piece of content will link directly to that new product so that we're going to not only show you how to be smarter about reading financial statements and valuing a business, we're going to provide you the tool to do it more efficiently and effectively and have it all be in one place on the new FastGraph offering. So look for that early next year. I want to thank you for watching. If you like this, please subscribe. If you haven't subscribed already, I really appreciate it, and we look forward to giving you a lot of information here at the FastGraph Value U Academy.